Hello guys, and welcome to another video. This particular trade took place on October 11th. It was a pretty rough day for me when I conducted this day. I started off really good. I had a successful trade where I took 6 points in the pre-market, and as soon as the market opened, I had this tunnel vision on the market trending down. I was in the impression that the market will continue to trend down after a buyer failure pattern, but that never developed. What did develop was this giant run up that the market took, and as you can see, I mean, it just ripped up high. Unfortunately, I missed that trade. I took two losses on that run up, attempting to short the market, and it nearly erased all my gains. I think I had two ticks left over. At that point, I had to take a break. I had to just had to go outside, walk. And so I took about a 20-minute break just to break that mental cycle. I tend to get this tunnel vision when I trade, and after making a few mistakes, I just keep, I guess, repeating the mistake in an attempt to prove my ego that I'm right. So in order to break that cycle, you just have to get away from it all. So as this particular trade continued, let's go ahead and hit play and just kind of let the trade play out a little bit. I'm going to fast forward to save time. This particular trade took about a minute and a half. Essentially, what we had going over here was a buyer trap. I was taking a look at the price action, and as you can see from this particular from 6,000 tick chart, uh, the price right here. Well, let me move back here. That candle right there. The buyers pushed it up above 4,400. They were not able to contain it. Then the price moved down, hit the 90 MA, went below it. The buyers tried again right there, and again, we're not able to contain it on this particular spot right here. So I watched that. Essentially, you have higher lows going on. The price hit the 21 EMA, bounced off that. You have a shooting star right there. We have another shooting star, and that's what I'm keeping an eye on. Hey, what's going to happen next? I was anticipating this particular trade to kind of continue higher to around the 40, the same 44,000, excuse me, 407 level, but it just didn't come to fruition. So let's kind of move out and see what's going on. So the MACD is trending down. Um, the RSI as well. It seems going to be mid-range. Those levels I don't really rely on. I kind of leave them alone. The only time I really look at those is when the market is diverging away from the price. So if the MACD is diverging away the price, for example, MACD is trending down, the price is going up. I anticipate a nice little breakout there. So the price is I have this previous higher resistance line over here. The price goes above that, so let's fast forward a little bit. All right, and here where the fun begins. I'm anticipating a buyer trap at this swing high. So I'm anticipating right there. Does it happen? No, it went right above it. And then the next level would be this level right here. So those are the two levels right there you want to keep an eye on. Every swing high or swing low has the potential to be either buyer trap or seller trap. So when you see those levels, especially in an extended market like this, where you're anticipating a buyer failure, definitely be vigilant and keeping an eye out for these buyer traps. At this time, that's the trade I'll be taking here in a minute. So let's fast forward again. Let's let it play out for a second. Again, price was kind of moving a little slower towards this end. All right, and as you can tell, all right, I have my, well, let's go back. All right, I put my sell limit order on the chart. I Let's go ahead and zoom in a little bit again. So I have my sell order. As you can see, this swing high right here is where the trap is. And the trap right there shows you that, hey, that right there is a good signal candle for a trap. You have essentially a shooting star. What you want to see in this particular instance, if the market was bullish, you would want to see this price keep pushing through. You don't want to see that. Um, so going back to the 6,000 tick chart, as you can tell over here, we have a high, we have a lower high, and then you have this trap. I want to see the price action blowing through this. I want to see an engulfing candle. I don't want to see this. If you're a buyer at this point, you should definitely be concerned. So, based on that candle alone, that was my signal candle. That was to indicate to me that, hey, we're having trouble. It's above this prior swing high, and we have a nice shooting star. So moving forward, you will see me take this trade. I put my sell order right below that, right at 444.04. And right now I'm looking and waiting for sellers to move in. I want to see a big candle. All right, let's fast forward. We get triggered in. To be honest, I'm a little concerned over here. I'm not seeing the big seller push down that I want. I want to see a big push down to that 90 MA. I took this trade. I was pretty aggressive, but since I took the trade, I'm in it now. We have to play ball. I can't change my plan now since I'm in it. My stop, I'm in a good location. My stop is 3 ticks above the entry price at 407. If this trade goes against me, then obviously the buyers have solid control. They're going to make a new high. And this trade, or this pattern on the 6,000 tick chart turns into the ABCD pattern. Thankfully for me, this does not come to fruition. So as you can see from the next few seconds, I'm sweating bullets right about this point. Let's fast forward. And then we go. We see another shooting star. We see sellers beginning to have the gumption to move in here. All right. And at this point, I'm starting to feel confident. Again, if I was a buyer, I would want to see that. That would definitely make me question the validity of my trade if I was going long. So first target was 401, 3 ticks. Excuse me, 3 points away from my entry. So I have a 12 tick stop, 12 tick first target. Second target was 398. And then my runner, I left it at 391. I will adjust it here based on the Fibonacci levels on the 6,000 tick chart. As we continue moving forward, I pretty confident at this point that I'm on the right side of the trade, and I'm giddy with joy that, hey, this is going to be a solid trade, and it has the potential to be an explosive trade that you rarely get. But here lately, with the volatility that we've been experiencing, these trades are more common than anything else now. This also highlights the fact that buyers, had a very critical level to keep the price above 4,400 on a daily chart. If you happen to take a look at that, forms the perfect channel. It happens to be the higher low of that particular trend if you look at a daily chart. But the buyers really need to push this price above that level and hold it. Unfortunately,
Target filled.
They were not able to do that, and that to me highlights even more that this market in itself is done. The bullish market is no longer there. We are in a solid sideways range now. Consolidation period for whether it be a next move up possibly or a breakdown in price. I believe that the probability of this market moving higher is very low, and I'm definitely anticipating a pullback to the March 2021 price levels. I believe it's around 2100. So that makes it about 50% pullback. I believe that we will get there, maybe in the next year or so, but who knows? We'll see what the market holds for us. As day traders, we just take advantage of the market on a daily basis. We make money no matter if the market goes up or down. But again, anyway, let's go back to the 1,000 tick chart. As you can see, the first target got filled. At this point, I moved my entry, my stop loss to break even. This way now, this is a risk-free trade. I don't have to worry about losing money at the end of the day. I just made some money, and we're going to definitely walk away with this being proud of ourselves. Again, next target is 398. Let's fast forward it. All right. Price is just bouncing around using the previous swing high as resistance. Buyers can't even get it above that level. So, and now as you can tell, sellers are moving in strong, and we're making money. Second target is on the verge of getting hit. And this is where honestly I wasn't really paying attention to the runner. I was just kind of I don't know, off in my own little world. I was kind of keeping an eye on Nasdaq as well. I try to practice on trading multiple markets right now. Unfortunately, I'm not that good at trading Nasdaq.
Target filled.
There you go. Second target filled. I'm not that good at trading the Nasdaq. We're focusing on the Nasdaq and the ES at the same time. So with practice, I believe that I should get more proficient at that. Biggest hurdle now, we have the 200 EMA on the ES. Um, this is where I kind of move my stop loss down, trailing that runner now. Try and take as much money off the table as possible. In this particular instance, when I start trailing, I always keep my price above the 21 EMA. Once the price gets to a certain measure move area, I keep that trail stop 2 ticks behind. But in this instance, as you can tell, good area, keeping it above that 21 EMA with previous swing highs or lows. As we move forward, again, right here, big weakness. I mean, that price right there, breaking the 200 EMA, very solid, very good momentum for the sellers, and that's a very bad sign for the bears. Also on a 6,000 tick chart, that's a big candle that the bears now have to contend with. Um, right here is I think I'm trying to start analyzing my runner. Where should I move it based on the Fibonacci levels? As you can tell right there, I almost let that get away from me. I've done this multiple times, not paying attention to the market, and that's when I'm kind of panicking and freaking out. I was like, oh God, I got to move this down quick. It's nothing worse than not paying attention to your chart, looking at something else, and then losing an opportunity of making more money because you just weren't vigilant and aware of everything that's going on. But hey, we're all humans. We all make mistakes, but definitely being engaged in your charts is very important. Again, I moved the runner down. And in addition to that, I also moved my stop loss to kind of follow suit. I'm looking at 383.75 as a 50% retracement on Fibonacci. I believe that's usually a good level area, you know, for a pullback. It also corresponds, and also this still has the possibility to be an ABCD pattern. So usually you want looking at 38.2 retracement for an ABCD pattern. Over that, start being cautious about the ABCD pattern not being an ABCD pattern. If it goes past 50, then the probability of that turning into ABCD pattern is very weak. You want to see buyers moving with some very aggressive momentum behind the candles to confirm that it still continues to be an ABCD pattern. So I'm keeping an eye on that level and trying to definitely ascertain some more information in regards to this pushing back up. So let's continue fast forward. And as you can see, sellers are just taking control. Excuse me. Let's go back and kind of explain what I'm doing here. I'm taking a pretty much a measured move line and trying to determine the next potential area of price action or the price target. What I do is I take it from the point of breakout or breakdown to the first pullback, and then that kind of gives you an ability to chart that. I copy and paste it, and I'm anticipating the second leg of this measure move to be 4378. This particular trade, that proves to be the correct measure move. The market tends to generally move in 2 measure move or 3 measure move legs, and I tend to have kind of a 3 to 4 point margin of error when determining those areas. So it's not a pinpoint mark. It's more like drawing it with a crayon on that particular area. So the 378 area is definitely an area to anticipate the price to move to. In the past, I used to get greedy and I used to leave my, ignore my stop loss and say, hey, the price is going to go there. It's got to go there. I mean, this is a measured move. And times the price will just get rejected, swing back up, and stop me out, and I lose a lot of money off the table. So definitely be vigilant, keeping that stop loss tight, even though you're anticipating the price to go in your area. So price continues to move down. At this time, I'm moving my runner to the measured move, at least 1 point above it, and the sellers are in solid control. Biggest hurdle now is the 200 EMA on a 6,000 tick chart. Also, that 50% Fibonacci retracement level is an area they definitely have to always be concerned about in regards to your the buyers moving in. All right, let's keep fast forwarding it. And at this point, I can't help but overlook that big nice profit ticker going off of their $800 on one runner left. Definitely it's tempting to just cash out, but again, follow your rules, trend your stop loss down with the runner. At this point, I believe I'm still trying to keep it up with the 21 EMA, but definitely be vigilant and tighten up your stop loss. Two candle stop loss tends to be a pretty safe area. At this point, it still relatively keeps it above the 21 EMA. All right, as we continue to move this time, let's look here. Seller's still in solid control. At this point, I'm starting to get a little worried. It's like, hey, the MACD is beginning to show some signs of reversing, the RSI as well. The price is trending above the 90 EMA. Also looks like it's getting ready to trend up above the 21. Definitely leave your stop where it's at. It's a good place to take profits, but just definitely keep an eye. From my experience, the 21 EMA, especially on the first pullback, and let's zoom in here so I can show you guys what I'm talking about. If it works. All right. As you can see, the thing that kind of kept me in this trade and kept me from moving my stop loss and tightening it up is the fact that right here, this candle right there, we have what is it is a shallow pullback. And as you can see, if I can get better at, well, sucking it up here, guys. Sorry. All right, that arrow line corresponds with that 21 EMA right there. Also, this green candle that looks like a shooting star, that right there is a shallow pullback. What I consider a shallow pullback is if it doesn't touch the 21 EMA, it's a shallow pullback. Expect a lower low as soon as you see that. So what I'm seeing is a shallow pullback into a lower low. Now I'm anticipating the price to hit the 21 EMA, break above it with a trap potentially, which you have a trap right above that little swing high right there, and then anticipating another lower low. So that's what kept me keeping my stop loss over there. Usually the first pullback to the first 21 EMA point will trend lower. Not always, and nothing's guaranteed in the market, but the probability of this continuing now with the downtrend is great. So let's move forward and keep watching. As you can see, goes right above it. The trap is confirmed. Sellers are moving in, and boom. We are still riding this. See, they just can't push it. The buyers just can't push it above that 21 EMA. The sellers are shorting right off that. They tried again. Again, nothing. So you have a lot of buyer rejection at that 21 EMA. And the price continues. Move my stop loss down above that resistance area right there. 391 is a good spot. There you go. Price keeps going. Keeps going. And that's where it kind of just drags on, takes forever. And it's just clawing itself down. The biggest hurdle for that was this particular area right here. And I want to point out to you guys. Let's leave this video to play. Right here. I drew a channel line on a 6,000 tick chart. And as you can see from here, you have that area. We have that area. So I was able to draw a channel on this. This right here is where I was expecting the buyers to move in. It was an area of concern for me, but as you can see, the buyers are not doing it. They're nowhere to be found. Once that price broke below that trend line, that right there confirmed to me that, hey, this 50% retracement area right here on a Fibonacci is not going to be a go. The buyers have lost control. The buyers are nowhere to be found, and the sellers are in solid control. This trade is got a lot of leg room to continue down. So then it confirms for me that the measure move at 78 could definitely be in play. So we continue and trailing it down. This is where I'm just kind of anticipating, the buyers potentially moving back in, pushing the price above the 200. I get a little skittish. I get scared. I'm looking at that price at this profit area right here, and I'm just trying to protect my profits. That's the biggest hurdle as well that I'm still struggling with, is the fact that sometimes I trade with my P&L versus trading with the chart. I get excited. I'm like, man, that's $800. I'm kicking ass. Let's just take the money and go, instead of trading with the trade. But hey, I'm not getting greedy. I'm taking my money off the table and rolling out there. As we continue, you can see sellers still in control. They're kicking butt. I'm like, man, I'm up $1,000. Yay. And I'm like, all right, here we go. Here we go. Second push back to the 21 EMA on a 1,000 tick chart. And I'm also paying attention to the 6,000 tick chart. That hammer candle right now that's forming with that big wick on there right here is giving me a lot of cause for concern that this may potentially be a dead end now. The buyers may be moving in. Excuse me. There you go. The buyers are going to be moving in. They're going to be moving in hard. That right there, it is not a good candle to see if you're still in the short. It tells you that, hey, the buyers are taking control here. So let's continue. And right there, I got stopped out. I timed my stop too soon on this particular trade. I moved it right above that 21 EMA. And what happens? Sellers still can take control, and they move in and eventually complete this measure move and actually go for another third leg down. But that particular candle on a 6,000 tick chart definitely gave me cause for concern. There's nothing wrong with taking your money at the point and just running. But hey, the trade worked out really well. That was a perfect buyer trap pattern that I took advantage of. I got a little too aggressive. Normally I would wait for the price to go below the 21 EMA at this particular area right here. But at the end of the day, hey, I was aggressive. The charts worked out well. I made money. I hope this kind of gives you guys a great idea of what to look for as you scout the charts. Definitely practice. Definitely take your time, especially looking for those entry candles and looking up for the previous swing highs or swing lows and anticipate a buyer trap or seller trap. Well, guys, that concludes this video. I hope you guys enjoyed it. Moving forward, I'll do my best to continue putting out good quality videos. As time progresses, hopefully I'll get better at this. In addition to that, if you guys have any questions, any comments, any suggestions, please feel free to put that in the comment section below. Please subscribe to this video and this channel and hit the like button if possible. This way kind of helps the algorithm and gets this out to as many traders as possible. Moving forward again, I'll do my best to provide you guys a better quality video. And in addition to that, just please remember, if you guys get frustrated, if you guys get tired, if you guys fail at trades, hey, just brush it off. Failure is part of the process. Learn from your failures, write your journals, document everything that you're doing, record your trades if possible, and go back and, play it back and learn from those mistakes. But again, thank you so much for you guys' time. Real quick before we close this out, I'd like to go ahead and give a shout out to our video sponsor for this week. It is Seeds of Odin. Again, www.seedsofodin.com. It is a #1 hemp seed company in the United States that provides high quality hemp seeds for farmers, for individual growers, and it has a wide range selection of heirloom hemp seeds. So again, if you guys are looking for a good hemp company or cannabis hemp seed company out there, definitely visit seedsofodin.com. Their address will be posted below in the description. And please thank them for sponsoring us. Again, thank you so much for your guys' time. We'll see you next time.